Hello everybody, this is Tom Randall from GoldenCare USA. I want to welcome you to this webinar today, and it's my pleasure today to be speaking to you about our critical care product. It's literally just one of our newest innovations. We're real proud of the fact it's getting approved across the states as we speak. And this product, hopefully you'll agree with me after this short webinar today, is really one of those things that I look at agents all across the country and say, if you're serious about long-term care, if you're serious about helping more of your clients, this is literally a no-brainer product. It's got to be part of your portfolio. And with that said, I know your time is valuable. I think we're hitting the 2 o'clock hour, so I'm going to jump right in here. And I do have you in presentation mode, just to let you know. A couple disclaimers here is that I have you in presentation mode, so you won't be able to yell at me yet, but I promise at the end I'll open it up and try to answer any questions you may have. And also, remember as we go through this is a lot of material, especially if this is your first time getting your arms around this product. I do have the slides available, and I'll show you how you can get these slides right after this presentation so that you don't have to sit and take copious notes, etc. That being said, let's jump right in. This is a fun product, and I'll tell you what, if you've been in long-term care for a while, you're going to see that it has a lot of pluses, and this product is something that you're going to really enjoy because of our fun time on the underwriting. We don't have as many hoops to go through, if you will. If you look at this one, what we're really pushing here is this is a great product for everybody, but what this product does best is it helps you as a long-term care specialist go out there and help your uninsurable prospects or your declined long-term care insurance clients. So basically, in a nutshell, I'm going to give you a quick broad overview, and then we'll talk a little deeper about why this product works so well for you. First of all, unlike the long applications that you might be used to with long-term care, this is a very, very simple one-page of underwriting questions. 5 questions, yes or no application, and 98% issue rate. If you've been in long-term care as long as I have, you know that's exciting right there. No height and weight chart, no telephone interviews, no APSs, no cognitives to worry about. The good news, too, is once the product's in place, it's easier access to benefits than what we might be used to with long-term care insurance. Remember, this product, I'm going to show you, pays cash, and it's always first-day coverage if something happens. There's no 2 of 6 ADLs to worry about like we have with long-term care insurance, and none of that 90-day pre-cert that we worry about with long-term care as well. This is a diagnosis trigger, and I'll talk more about what those diagnoses are in a couple minutes, but the key with this is it pays no matter what. Once you're diagnosed, this policy will pay out in cash, and we know cash is king. This product pays out in cash no matter what. Even if you get better, we'll talk about that later on as well. Okay? And because we're in a long-term care business, this was designed by long-term care agents for long-term care agents. This product fits so well because it pays 100%, up to 100% extra for assisted living or nursing home. Pays 50% over and above what the monthly benefit is, and we'll talk about that, for assisted living, and it pays 100% extra for nursing home. Good news for you folks is unlike most products in the critical illness arena, this product pays lifetime level renewals, and we'll talk more about that in a couple minutes as well. Remember, as we go through here, I'm going to talk a little bit about critical illness. I'm going to talk a little bit about why this product isn't your typical critical illness plan, and I'm going to show you why it fits so well with long-term care. One of the things we'll see is we're talking to our clients, we're going to talk about the fact that it covers where long-term care won't. It covers heart attacks, bypass surgery, kidney failure, coma, etc. Some of those things that it pays at 100% where a long-term care policy traditionally wouldn't pay at all. And for you, the agents, remember some of the hoops we jump through with long-term care aren't necessary with this product. There's no special long-term care continuing education needed and no partnership training required for this product. I literally think you'll agree with me if you've been doing long-term care especially, this is by far the best alternative in the industry. And believe it or not, for some of your clients, it might even be a better option than long-term care insurance. Okay? That being said, I want to make sure you know, I'm not going to go out and tell you approach people with this product before long-term care. Remember what we're concentrating on this webinar mainly is for your clients out there who unfortunately you can develop the need for long-term care but they just can't get a policy in place. Okay? That being said, when you're sitting across the table from an uninsurable prospect or if you're sitting across the table from somebody who's been declined, if you can ask yourself 3 questions, you're going to see how great this product fits. If in the last 10 years they haven't been treated for any of the diagnoses on the slide in front of you, you can see these are the biggies up there, right? Most people aren't going to have any problems with most of those issues. Those are knockout questions. Then, in the past 5 years, have they had problems with drug or alcohol, or have they been confined to a nursing home or assisted living facility at the current time. Okay? And then finally, in the past 2 years, have you been advised to seek treatment or medical advice but haven't yet done so, or experienced any symptoms that would cause an ordinary prudent person to seek advice for the major conditions that we talked about previously and for these additional conditions? Okay, and remember, these aren't knockout questions here. These are things that we're going to be able to hopefully get you some help within the plan. And we'll talk about that in a few minutes. And remember, don't write all this down because we can get you the slides so you'll be able to see it in just a few minutes after the webinar as well. Okay? The key with this is, if you're sitting across the table or if you're taking notes on one of your clients and you answered no to those questions, we might have a great solution for your prospect. And that's where critical care comes in. I already talked about the fact that this product was designed by long-term care agents for long-term care specialists and agents like yourself. And that's where this Guarantee Trust Life product, this critical care product, comes in so well. On the list in front of you, you're going to see the states that it's approved in. This should be pretty up to date. It says September 12th, but I think we're the same as we were last week. New Jersey, there's a little bit of an asterisk there if you happen to be from New Jersey. The product's approved, but we haven't had some printed material yet, but that should be coming out any day. So let's look overview real quickly on the critical illness. And again, I'm not trying to sell you to throw away your long-term care and go out and sell just critical illness, but I do want you, if you're relatively new to this industry, understand just how on its own critical illness is a great plan. And then I'm going to swing back around and show you why this product is definitely different and much better than a traditional critical illness plan, okay? But basically, at the end of the day, we know times have changed. We've got a lot of medical treatments, and people are surviving critical illness much, much better in the United States than ever before. But it's a very prevalent problem, right? And I think most of us know this. Look at that first stat. That scared the pants off me. 1 in 2 people will be diagnosed with cancer during their lifetime. It's literally almost 1 in 2. It's about 46%. Every 40 seconds, someone in the U.S. has a stroke. Look at the Americans who are having coronary attacks or recurrent heart attacks. We know there's lots and lots of people having problems with critical illness. But again, the survival odds today are tremendous. 86% of hospitalized heart attack patients survive. And that's even higher if it's their first heart attack. 80% of stroke patients survive the initial event. 35% of those recover completely. The survival rate for kidney failure is 60 to 90%. And again, even with major organ transplants, 50 to 90% survive those type of things. And those are major critical illnesses, aren't they? So that's why we see that critical illness is important. Because remember, even people who have medical insurance aren't covered for a lot of the things that there's definitely cost for with critical illness. Most medical plans provide that hospital medical care, but they don't pay for things like co-pays, transportation, lodging, loss of wages, child care, all those different things that we don't really think about until we really look into what would happen and what kind of potential financial impact you'd have with critical illness. And that's why these products are taking off across the United States today. Look at that next one. The slat you see there, more than 50% of bankruptcies are caused by excess medical expenses, and the key is almost 80% of those people had health insurance. Half of the foreclosures in America today are due to debt from medical causes. About 1.5 million homeowners are currently in danger of losing their homes. So we know critical illness standing on its own is a tremendous product. But what we're going to talk about today is why this is so important to you as a long-term care specialist out there in the trenches trying to help as many people as possible. Because the thing we saw as we designed this plan with GTL is we saw that there was major similar claims with long-term care and with critical illness plans, isn't there? Look at that top right. Alzheimer's, strokes, and cancer represent 70% of all the long-term care claims paid out there. And on the flip side, cancer, heart attacks, and strokes caused 80% of the new critical illness claims in America. So when you look at those two things, you can see there's a lot of similarities and there's a lot of what we call crossover. And I'm going to talk about that a little bit more detail here in a few minutes. Because let's take a closer look at critical care and see why this works so well. And I can't stress enough, we almost named this product too well, because people think of it right away and sometimes shut us off or put up the defenses going, oh, that's critical illness. I don't want to get into that market. Remember, it is on a critical illness chassis, but the key with this product is its difference. This product has a critical illness chassis, which makes it much easier to get benefits and pay out more liberally, But on the flip side, it's got a lot to do with long-term care because we built it with that intent. Let me show you what I mean. First of all, because it's critical illness, it's triggered by diagnoses. We talked about this a little bit in the introduction. The major covered conditions with this plan are on the screen. Okay? Cancer, and again, you don't have to write these down. You'll get these within your policy information and in the slides itself. Okay? And then the key is with this product is once you're diagnosed, it pays cash. And we'll talk about how to design a plan in a couple minutes. But the nice part about this is GoldenCare, because we helped design it, we love cash. These products pay a monthly cash benefit. It pays for all those things we talked about that we have shortages from traditional medical insurance and all those things that are causing bankruptcies across the United States today. Okay? But it stands apart from the typical critical illness in a couple different ways. Number one, it covers Alzheimer's disease. Most critical illness out there won't cover Alzheimer's. We knew it was important for our market. Pays increased benefits when people have to reside in assisted living or nursing home. We'll talk about the details of that in a second, but it's a great thing for you and your clients, especially after discussing long-term care insurance. Coverage is available all the way up to age 84. We know with traditional critical illness plans, a lot of those drop off the map, jump off the cliff, or limit benefits once people hit age 65 or so. This product is designed to be for the older folks as well. You can write that app all the way up to age 84. And of course, coverage extends beyond that. It stands apart from long-term care because it does some things that a lot of us don't expect when we're in the long-term care arena. This one triggers benefits sooner. Remember, it's based on diagnosis, so you don't have to have that 90-day certification. You don't have to worry about it, activities of daily living problems, etc. As soon as a doctor diagnoses you, the product can pay out first day. The underwriting, again, I can't stress it enough. This is the thing the agents love the most across the country. The underwriting is easier and much, much faster with this plan, so we have higher issue rates. We know this isn't a hobby for you folks out there. You as an agent can not only help more people, but get paid more often. And remember, while it's not long-term care, it does pay increased benefits for assisted living or nursing home. The main reason you folks want to offer this, not only do you get to help more people because of the triggers, etc., and because of the easy application and easy issuing, the key is what we call crossover. Again, this talks a little bit about how those claims cross over. And I want to spend just a minute here, and again, just sit back and kind of listen to what I'm saying, because I think if you do, you're going to understand this product fits many, many more people than you might have imagined. The key is that crossover again. 70% of long-term care insurance claim dollars go to Alzheimer's, strokes, and cancer. With critical care, because it's based on a lighter trigger, I think we can agree it should cover those claims that long-term care policies will have here. In fact, because those triggers will cover more claims because they're lighter, you don't have to worry about ADLs, remember, or 90-day pre-certs. Maybe we'd say it covers about 10% additional. I think most of us would agree there, especially with strokes, etc., and cancer. If you'd agree to that one, then we're looking at about an 80% crossover. Okay, so we know it's important because your client faced those risks out there. But let's go a step further. Remember, critical care is going to pay for a lot of instances where long-term care typically wouldn't pay. For example, heart attacks, bypass surgery. These are big, big issues in America. Over 1 million people with bypass surgeries, over 1 million people with heart attacks. We know in a long-term care arena, we don't pay for a lot of that, do we? Most people who have a heart attack or bypass surgery wouldn't typically trigger their long-term care policy because they're going to get better a little bit quicker. But the key is with this product pays on diagnosis. So, well, even though we're guessing here, can we assume that maybe it was a 10% more chance that your clients might have a heart attack or bypass surgery because of those numbers we see on the screen? That's a pretty good bet. So we're looking at a 90% crossover. But guess what? I give my brother Mark credit. He's the one who researched for this presentation and put it together. After he did further research, he saw that the reality is heart and bypass assumption at 10% was wrong. It's actually 33% of the people out there will be diagnosed with either a heart attack or bypass surgery at some point in their life. Now we're looking at the fact that if you have any risk factor for the heart problems, your odds can go as high as 47%. So guess what that means? For you and your clients, the people you want to help, there's potentially literally over 100% crossover. that this policy will pay where a long-term care product would pay or couldn't pay. I know some agents out there are saying, yeah, but there's some conditions that my clients are going to have that it wouldn't pay, right? What about arthritis? Boy, this is one of those that my client looks like they might be at risk for arthritis. They couldn't get long-term care. Well, this product, arthritis, isn't one of the major conditions that it's going to pay for, so maybe I shouldn't get it. The key here, you guys, is perspective. Remember, are you looking at it from your head saying, well, I probably wouldn't pay? Or are you putting yourself in your client's shoes like you should be and realize that to them, guess what? They know, and you've educated them about the needs for long-term care. They know about the aging of America. They know that they have a better than 50% chance, 70% at the very least, to go to the nursing home. You're looking at it going, guess what? I need long-term care insurance, or I need some type of protection here for all the things that could happen to me. So guess what? When I hear people say that, I say, what's the alternative? If they won't cover arthritis, remember they can't get long-term care insurance anyway. This covers a lot of those other conditions that your client may be worried about as well. Okay? So it may not cover the arthritis itself, but because it covers those other conditions, I promise you this, many, many of your clients will look at favorably on at least an option to get some type of coverage. Okay? Don't forget that. Once we've taught that one slide, we've had a lot of agents jump on board and go out and help people. So I always want to stress that part. Remember to look at it from your client's perspective and at least offer, because once they hear about it, it's much more intriguing. Okay? Look at it from the broad picture, you guys. Odds of having cancer is around 50%. The heart attack we talked about was 33 to 47% on the top end. The Alzheimer's Association, remember, tells us that at age 85, you got a coin's flip chance of getting Alzheimer's. This is just like long-term care, isn't it? It's just like what we talked about, people saying, you're buying a policy, you're paying premiums, but this pretty much eliminates that whole thought of, what if I never need it? We know, just like long-term care, when we educate folks, it's more like, when will you need it, than if you'll ever need it, isn't it? Another reason a long-term care agent should offer this is when you look at Alzheimer's. This is one of the things that a lot of agents miss. 49% of long-term care insurance claims based on long-term care carriers' records, most long-term care claims are an industry average of 659 days. I'm going to show you how you can design a critical care plan here with a 2-year benefit, and that's going to provide sufficient benefits to exceed the industry average claim there. That's how important this is. Even when we know Alzheimer's is a long and a terrible disease that can hit you for long periods of time, remember the key is when you look at the averages, this policy can do a great job for you. The potential crossover that we talked about that's literally over 100% potentially, plus that Alzheimer's, means this literally is the best alternative in the industry. So let me show you real quickly again how to design a plan for critical care. And remember, anytime you're looking at something for the first time, it might seem confusing. Don't panic. You can get these slides as a reference, and you're going to see this policy is by far much, much, much easier than a long-term care plan with all the moving parts of a long-term care policy. So you're going to see this is relatively simple as your backup plan, okay? First thing you're going to see, and this is usually based on underwriting, most people are going to choose the full critical care plan A that covers cancer, heart attacks, and strokes, plus the base part of it, Alzheimer's, kidney failure, organ transplant, paralysis, and coma, okay? But we're going to see as we get into the underwriting in a few minutes that there are times we have backup coverages for you. If, for example, somebody has some heart problems or a stroke problem, they can still get a policy, but they wouldn't be able to get the plan A. They would have to settle for plan B. And again, it still covers all the cancer problems that you might come across. Same thing on plan C, and we'll talk about that as we get into underwriting. Okay? And basically, when you're putting together a plan, it's pretty simple. You choose $500 to $3,000 per month in $250 increments, and you can also have dependent coverage of up to $500 per month as well. Okay? Benefit is increased, remember, for nursing homes. So you'd have 100% additional benefit if you went into a nursing home, and 50% additional if you went into an assisted living. The example at the bottom of your screen, pretty straightforward. If I offered somebody $2,000 as a monthly cash benefit as the base benefit at home, you can see that it would pay additional for assisted living and even more additional, twice as much for nursing home. As we get into the lifetime benefits of these plans, we're going to talk about the full monthly base benefit. And what I want you to remember there, full means the biggest. The full monthly base benefit is the nursing home. So in this example, if I had a $2,000 base benefit, my full monthly benefit would be $4,000 potentially. Okay? Then you select the benefit period. And remember, this is very straightforward with this policy. You choose 6 months, 12 months, 18 months, or 24 months as your benefit period. Remember, when you go on claim, it pays benefits first day based on diagnosis, and then it pays for whatever benefit period you chose. And I'll show you there are a couple with limited benefit periods that I'll talk about, but most of them will pay for that full benefit period for most of the larger conditions. Okay? And again, that'll make sense in a moment. The nice part about this, and something that separates it from traditional critical illness plans out there, is that this policy will restore those benefit periods. All you have to do is wait 12 months from one diagnosis to the next. For example, somebody could have a stroke, get paid the full benefit period, and as soon as the last month that they pay that benefit from the company, then the clock starts, and 12 months after that, he could have another stroke, or he could have any of the other diagnoses that are covered in the policy, and this policy would continue to pay. So that's the nice part about this that I want to make sure you realize. It doesn't stop or drop off the shelf once you have one diagnosis. Okay? The key with this is your lifetime maximum benefit. Calculating the lifetime maximum benefit is, of course, easy to do. You use that full monthly benefit we talked about. Remember, that's the nursing home benefit, the most it can pay out in any given month. And you multiply that by the benefit period, the 6 months, 12 months, 18 or 24 months we talked about. And then you multiply that by the factor of 3. That 3 factor is always part of the policy, okay? So remember, 3 doesn't change. That's always what you multiply it by to find your lifetime maximum benefit. So as in our example, if we selected that base benefit of $2,000 we talked about earlier, we know it pays twice that for nursing home, so $4,000. So it's pretty simple math to figure out our lifetime maximum. $4,000 times a 24-month period, for example, times that steady factor of 3, and we've got a lifetime maximum pool of money of $288,000. The key with this, folks, and the only thing you have to remember is that that's the maximum dollar amount, no matter what, this policy will pay out under any circumstance with that monthly base of benefit we talked about. So when I talk about restoration of benefit periods, you could keep having restorations until this policy paid out that entire $288,000. Okay? Here's where the coverage limits are. Remember, it pays 100% for whatever benefit period you choose for all the conditions except for those 4 that you see shortened benefits by. And this is common sense, right? We know cancer in situ, for example, that's a pre-stage cancer that stays in the original tissue that it was diagnosed in. It hasn't moved out of that area, metastasized, if you will. Heart attack, 3 months. Most people are going to be more than happy and well after a heart attack after 3 months. Or bypass surgery is 2 months. Or down at the bottom, a coma is 3 months, because most stays in a coma will be short anyway. So actuarially, it was set up to pay the full benefit period except for some of those conditions that most people would agree they'd recover from sooner rather than later. Okay? Here's an example. And again, this looks like a lot of numbers on the screen. Don't panic. You're going to get these slides, so it'll be something you can refer back to later. But basically, I want to make it really clear as you educate your clients on this, this isn't a typical critical illness policy. This policy stays alive to help you down the line. Let's pretend I sold Bob a long-term care policy that's a 24-month a critical care policy, I better get that right, that pays for 24 months at $2,000 base or $4,000 nursing home. There's that $288,000 max we talked about. In this example, poor Bob's doing pretty good, but then at one point he has a stroke. He has to stay at home. The policy will pay for the entire 24 months at $2,000 a month because he's at home, right? Remember, Bob's had this stroke. It was a pretty minor stroke. He's feeling better after 3 or 4 months. It doesn't matter. The policy still continues to pay for the full 24 months. Poor Bob would have dropped off the shelf and died. This policy, again, continues to pay. So if Bob passes away at any time, he would continue to get the full benefit period. They wouldn't pay monthly in that case. They would pay the entire lump sum that he's still due after certificate of death, etc. Okay? That policy is different from what we're used to with long-term care. But let's go back to our example. On his initial claim, he gets paid out $48,000 for that first stroke, so his lifetime maximum drops down to $240,000 in the lower left. Now, poor Bob has some bad luck, and 3 years later, he's diagnosed with cancer. Again, he stays at home, but upon diagnosis, GTL is going to start paying out for his critical care policy. He will get paid, again, the full 100% monthly benefit for 24 months, another $48,000. Now Bob's lifetime maximum in the middle bottom goes down to $192,000 left. Bob's luck doesn't get much better because 6 years later, he has a second stroke. Again, he stays at home, but in this case, he still gets paid the full 24 months. Okay? And again, whether Bob gets better or whether Bob passes away, he's going to get the full payment for that particular critical illness claim. In this case, Bob still has half of his lifetime maximum left. Because he had all of his care at home, he's still got half of it left even after 3 major claims. If you look at example B, I'm just showing you here, if Bob had worse luck than we talked about previously and he had to go to a nursing home, you can see there, look in the middle slide, when he gets cancer, he has to go to a nursing home. Instead of paying the $2,000, we know nursing homes will pay twice as much, so it pays $4,000. So in this case, he would use $96,000 for that particular claim. Same thing on the far right, nursing home is just double the claim. So even after 2 nursing home stays, Bob would still have $48,000 remaining in case something else happened later on. That's the power of this policy. It's a thing that gives your people long-term care. When they put that head on the pillow, they have that long-term sense of stability because this product is going to be there for them in the future. Okay? Let's look at underwriting. This is the part that gets most long-term care agents excited, especially if you've been writing enough that you realize that we're looking at a product that, with all the changes out there, not only are the rates getting more expensive, but companies are tightening those screws on the underwriting. We all know this product isn't as easy to get in place as it was 10 or 15 years ago. This product's getting tougher all the time to get healthy enough people that the companies want to take a chance. That's where this thing really sings and dances. If you look at the screen here, and again, you'll be able to look at it closer when you get the slides. Look at how nice this policy does for your clients when you get in those red circle areas. This is basically a copy of our United of Omaha, our primary long-term care carrier that's been helping people across the country and doing a great job helping people with long-term care. But every red circle you see on your screen is one of those things that's a knockout question for long-term care insurance. If your clients had problems with mobility up top, they would be knocked out. If they had problems having speech therapy or occupational therapy, they'd be knocked out. If they have ADL deficiencies, they're knocked out. Any of those big conditions you see circled on the bottom, they're going to be knocked out. These are conditions that you'd be able to get a policy, even a critical care policy, with the critical care policy. Okay, the full policy. Kind of boggled that, didn't I? The next one is strokes. Look down at the bottom. If you've had a TIA or if you've had a stroke, you wouldn't be acceptable for the entire Plan A, the critical care plan that covers everything. But the nice thing is you'd still be able to get the cancer care plus policy, and that's the one that's going to cover, still going to cover you for Alzheimer's, still going to cover you for the organ transplants, etc., but it just wouldn't be able to cover you for some of those areas that are going to have stroke issues, okay? The heart attacks and strokes. On the flip side, we go to the next screen, you can see here's the next page of that in our application for United of Omaha. If you're diabetic with over 50 units of insulin, you'd be acceptable, but again, you would have the Cancer Care Plus. You wouldn't be able to get the heart coverage, but you'd still have coverage for all the other major conditions with cancer, etc. Same thing when you have cancers, the flip side is true. If you're going to have cancers, you still aren't walking out the door with nothing. Like with long-term care, you're going to be able to still get the Cardiac Care Plus policy that'll cover all those heart conditions, etc., and cover the Alzheimer's and everything else within critical care. Just won't cover the cancer. If you are in any form of disability, you can still get acceptable coverage for the critical care policy. Okay? You can tell I have long-term care in my blood. I keep accidentally saying it, but you know I'm talking about the critical care policy today. As a matter of fact, for future reference, when you get these slides, here's all the different conditions that are taking from our United of Omaha underwriting guide that would be field declines for long-term care, but not for critical care. And there's lots of different things on there that we know as long-term care specialists and agents definitely have a lot of our people that may not be able to get a policy that could certainly get a policy with this critical care product. Let's take a quick look at the application. Again, the underwriting is where this thing's the king. 5 knockout questions, no height or weight questions. Every application is going to have a drug prescription history check, so make sure you don't get stingy on that part of it. That's the way this company is going to keep these products actuarially strong and make sure people aren't pulling any strings on them, okay? Most cases, you're not going to have any problem with an APS, and the fun part about this is the average underwriting time is under 5 days. A lot different from what we're used to with long-term care insurance, as you all know. Again, the one caveat is if something looks really weird on that app, if some of the drugs that they see in the drug prescription history look a little shaky, obviously the company at that point has the right to phone the client or put up a face-to-face or get some medical records, okay? But in most cases, we haven't seen that. We know this is a product that's much, much more straightforward. The nice part again here, there's 3 plans, so we have 3 different underwriting opportunities like we talked about already. If people have problems with heart issues, they can still get the Cancer Care Plus plan. And on the flip side, if you have people who have cancer issues, they can still get the Cardiac Care Plus plan. Okay, pretty straightforward stuff. Look at the underwriting questions. I'm going to show you real quickly an actual screenshot of that one-page app. And for you folks here, it's going to be really easy because it's the same slides I showed you at the beginning of this presentation today. The first one is the 10 years past. There's those major conditions we showed you on the first slide today. There, questions 2 and 3 are talking about the problems in the last 5 years or in the last 24 months. Have they had some major issues? And finally, they have questions 4 and 5. Okay? This is kind of a unique thing that they do, but it's really not counterintuitive. It's really something that makes sense to you once you look at it. So as I show you this, don't panic because of complexity, because it's much easier than you think when you're in front of the client showing them the application, okay? Basically, you're here with questions 4 and 5. These are partial knockout questions, okay? It says in the past 10 years, if you've had problems with cancer, or question 5, you can see there, if anyone proposed for insurance is under age 60, did 2 or more of your parents, sisters, brothers, etc., living or dead, suffer from cancer before age 60? So they're looking for some genetics here to see if there's problems. Okay? If you had either one of those, then you go down to the bottom where you're filling out what they want for coverage. You can see here it's saying if you answered yes to 4A or to 5A, then the cancer care coverage isn't available. You'd have to get the Cardiac Care Plus plan would be the only thing available for you. Does that make sense? Same thing on Part B's there, same exact deal. If you had problems with heart, or if somebody in your family, if you're under age 60, had problems with heart disease or stroke or diabetes, you'd see you wouldn't be able to get the cardiac care, but you could still get the cancer care coverage. Okay? That's how easy this is, and it's going to be really make sense and be smoother than you might think from this presentation when you're filling out the application for your client. Okay? Calculating rates doesn't get much easier than this. There's actually electronic rates that are available on the GTL website, and we can get you to that obviously once you get appointed. But we have a worksheet right in your underwriting guide. It's literally a big whopping 5-page underwriting guide, I think, and it walks you through the worksheet here real simply. And it doesn't get much easier than this. So I'm having this more for future reference for you, but I do want you to know it's pretty simple. So I'm going to walk you through it really, really quickly this afternoon. Basically, step 1, you find the base rate for your applicant. Okay? You can see there, critical care, there's Plan A, Plan B, and Plan C, just like we talked about. Your benefit period of 6, 12, 18, or 24, and then your monthly base amount. Okay? Once you do that, you'll see there's an additional area for the spouse's plan. Piece of cake. If they have kids, there's the dependents plan. And down at the bottom, all you do is go into the rate book that I'll show you in about 2 seconds, and you find the subtotal. That's your annual premium. You put in your optional return of premium. It's only 10 to 25% for this. Easy to find in the rate book. I'll show you. Then $25 policy fee. And then if you want to have a modal premium, you put it down at the bottom. Okay? Look how easy this is. There's my critical care. We have a block of rates for each benefit period. Okay, so if I chose 6 months, there it is on top. Below that's 12 months, 18, and 24. 1 page for each plan, Plan A, B, and C. The rates are annual rates, says right in the rate book. There's a 1.5 factor if somebody uses tobacco of any sort. $25 policy fee is mentioned on the page to remind you. That's how easy this is. Step 1, choose A, B, or C. Step 2, choose a benefit period. If I use 12 months, it'd be the center. We've narrowed our rates down to one block of rates. Okay? Choose the monthly base benefit. If we choose $1,500, the annual premium would be $929.64. A little bit more fun than using a long-term care rate book that companies got rid of years ago, right? Because there are too many moving parts. This product is real simple. You can usually figure out a rate in under a minute. $25 annual policy fees added on there. We got $954. If we want to do a monthly factor, we'd multiply it by 0.09 and get $85.92. Again, GTL does have easy-to-use software that you click in a few numbers and you can get these premiums really quickly on your laptop as well. We'll show you that link once we get appointed. As base rates here, sample rates, we're using Michigan, but the rate factor is pretty simple across the board. You can see here, very affordable plan when we're using a nice plan like this one, $1,500, for example, for a 12-month plan. Okay? The great follow-up webinar I want you to take care of and make sure you look at is, if you have time, jump on it tomorrow, Thursday, 9:20 at 10 a.m. Central Time. You'll hear about it through the same reason you heard about this one today. Jump on my brother Mark's Critical Care How to Sell It webinar. Tell you what, it'll blow you away when you hear how easy this product is to introduce to your clients. Once you have this in your portfolio, life's really easy, because you're going to talk to all your clients and you're going to say, let's talk about long-term care insurance. That's our primary, remember? And as we do that, we're going to remind our clients, even if we write a long-term care app, we're going to say, remember, long-term care insurance become real difficult to get. The companies are going to really look close and want to make sure they want to cover you. So we have a backup plan here that's a great option for you. And I don't have to go into detail today as much as to let you know, a lot of people get declined. If you get declined, it's not the end of the day. We're going to come back and we'll be able to talk again, and I'll be able to show you something that's a great alternative to traditional long-term care with the company we first offered. Okay? Once you do that, if you take that extra 2 or 3 minutes to educate your clients, you will be pleasantly surprised at how easy it is to come back in and throw them that lifeline, to have that extra cushion and that extra parachute, if you will, to give them some protection. Especially when you explain the fact that this critical care plan was designed specifically for them. It was designed to be able to give those people some level of protection that usually is much more broad than people assume. Okay? So you'll see how easy that is. As a matter of fact, we know this product works so well. We're so confident that it's going to succeed to help more of your clients that we'll put some skin in the game. I'll tell you what, if you want to be lazy and you don't want to get this product yourself and really understand it and really go out there and sell it, even though it's one of the easiest products you'll ever have in your portfolio, we buy your declines. If you're a long-term care specialist and you say you don't want to steer away from that and keep the blinders on, more power to you. Mark's going to show you how we'll go in and we'll even buy your declines from you and say, we'll do all the work. We'll go out and talk to your declines and we'll make sure we help those people. Because I promise you this, folks, I'm sincere about what I've done. I've done with GoldenCare here for 15 years, and I've got long-term care in my veins. It's still my primary goal to help as many people as I can get long-term care insurance. But you know what? I've given over 100 live seminars across the country to consumers, and one of the hardest things is when I spend the time educating people about the need for long-term care insurance and how we have the aging of America and how the fact that we're going to be sitting out there with literally 70 million seniors out there over age 65 in the year 2030. And I'll tell you what, one of the hardest things for me is when I realize a lot of them won't be able to get traditional long-term care insurance. When the rubber hits the road, at the time they have something that's a life-changing event, I feel bad if I can't do my job to educate them about why they need protection and how I can help them. This is one of those products that I look clients, agents all the time in the eye, and I say, if you're selling long-term care, if you're serious about it and rolling up those shirt sleeves, helping people, go the full mile. Get this product in your portfolio. It's, in my mind, it's your due diligence as an agent to have a product that you can help as many people as possible. If you can't get them long-term care insurance, you certainly have a very, very good chance of getting critical care policy. As a matter of fact, we've had an agent already who's went out in the first 2 weeks. He took this product, he embraced it. He went out and talked to 13 of his declines, people who are declined for long-term care or uninsurable, went out and wrote 13 apps. 12 of them got issued within 3 days of sending them into the company. Look at that, 12 different families that he was able to help. That's the power of doing your due diligence as an agent and helping folks with long-term care insurance and backing it up with a solid critical care policy from GTL. Okay, I'll get off my soapbox there, I promise, but I do want to let you know this is something I take seriously, and it's something that you as an agent can really spread your wings and help a lot of people with. So I hope you take the time to get appointed with GTL, get critical care, and let GoldenCare show you how we can go out there and help you help more clients. That being said, again, I'll jump off my soapbox here. I'm going to do a couple things before I open it up for questions, because I know a lot of you folks jump off. I do want to let you know this is Tom Randall from GoldenCare again. I want to thank you very much for spending some time this afternoon and letting me yap at you. And I do want to let you know again, take the time to call GoldenCare at 800-842-7799. If you're not appointed with this product, whatever you do, make sure you get appointed. Okay? Make sure you get appointed. I do have a question, maybe? No. And I'll open it up for questions here in a second. Be on the lookout for your GoldenCare reward points. This is a great program that's had a lot of agents get a ton of points for both production and for attending these webinars. So based on the email that you signed in with for this webinar, you'll be getting a webinar with your GoldenCare reward points. So be on the lookout there. And if you want a copy of today's slides, I can see I didn't change this here. I think they automatically send it out with you when you get your CE voucher for this. So if for some reason you don't get it, hold off for a half a day and email me at tomr@goldencareusa.com. You see at the bottom of your screen there. If you have a pen, jot that down. But you should automatically be getting your CE voucher and your other materials, and you'll have also an area that'll say if you want the slides, click here. Okay? Otherwise, get on our website, goldencareagent.com. Be on the lookout for more webinars out there because we've got some great things for you. And I'm going to try to stop talking and open it up for questions.